Afternoon or morning, wherever you are, whatever time it is. My name is Jack Elder, head of advanced planning for CBS Brokerage. Today, we are going to talk about a change that could impact your clients in Washington State. The state of Washington has changed their estate tax, and I want to spend a few minutes today talking about what those changes entail, what it means for your clients, what it means for advisors, and how we here at CBS Brokerage can help support you and your clients to plan for this increase in the estate tax. So, with that, let's jump right into it. Again, we're talking about Washington. So let's provide an overview of what those changes look like. So the key changes, the top estate tax rate jumped by 75% from 20 to 35%. So this impacts large estates significantly. The exemption is now set at 3 million per person, starting last month. So and that's tied to CPI. So it will increase with over time, just like the federal one does. Distinct from the federal exemption is that there's no portability though. So you do need to do an extra step of critical planning. And that this, the rates they ramp up and get so high that it does impact families in such an intense way that this is, a wealthy family or even not so wealthy, which I'm going to show you in a few minutes, that it's important that we go over this with you so you can bring solutions to your clients. So, uh, overall, why does this matter? It matters because your clients have saved their money, they've made good decisions, they've sacrificed and made good investments. You've done a great job being a steward of their wealth, and now they've accumulated some assets. They maybe have a qualified plan and a house, and some non-qualified. Maybe they've gotten an inheritance, and the risk is that tax exposure will reduce the amount that their heirs get, and it would go to the state of Washington, right, to the government. So it's important to do some planning to make sure that that wealth is protected. Okay. So the first thing I like to do is say, like this is, obviously for yourself, but it's easy to get to 3 million. If you've been a diligent saver and you own a home, and maybe you've got an inheritance coming, to be worth $3 million in the state of Washington, just look at home prices. That's not outrageous, right? And then if you were to take that $3 million net worth and grow it at 5%, bearing in mind the S&P grows at 8 to 9, right? Like land prices grow at whatever they grow at over time, just the rule of 72, 5% growth, that 55-year-old in 30 years could be worth a lot of money. And guess what? The estate tax exemption would while it grows, yes, that 3 million is growing, it's going to grow at CPI, which is maybe 2.5%. So if your estate's growing at a rate north of that, you're outpacing the protection that the exemption would give you. So in this example, someone worth 3 million today, wealth growing at 5%, look at age 85. Like they're yes, the exemption is 6 million and change, but their exposure is also 6 million and change because they're outpacing the growth of that protection. Okay. So then let's look at it. Let's forecast it out. So if you're worth $3 million today and you're an individual, no taxes. If you're a couple, no taxes. But let's go out to, if you're worth 7 million today and you're single, that's $500,000 tax bill, right? So, that's no small, that's no, that, it's almost 8% of your wealth gone to taxes. If you're married, and that's the columns on the right, and you do what is called AB trust planning, which I'll expand on in a minute, your estate tax is a little lower, right? Because while this is not portable the way the portability means, I'll use me and my wife as an example. When I die, if I file a tax return that says Jenny, my wife, gets my exemption, she now has two. Okay, now mine doesn't grow with inflation like hers would, but she has two. In Washington, you don't get that, right? So I get my exemption, Jenny would get hers. Okay, so if you look again at 7 million, that 530 for a single, that set the same amount of tax. If you do basic blocking and tackling, you knock that tax down by almost half. Okay, so it's critical you do your AB planning, which I'll talk about. So What do we do to deal with these taxes? There are some moves that you as an advisor can make and recommend to your clients. So the first is, and here's where we come in to help you, is AB trust planning. What that means is that the first spouse's exemption gets used. So in my example, it's me and Jenny. I pass away. We allocate to a trust that can benefit Jenny, my wife, and obviously my children. We allocate to that trust an amount equal to the exemption at the time. So if the exemption was 3 million and we're worth 7, when I die, 3 million goes into a trust. That way, and it goes into that trust free of Washington taxes. The 4 million, the balance passes to Jenny, income, estate, gift tax, everything tax free, because transfers between spouses are tax free. And then she has her exemption, whatever it happens to be at that time, to protect that 4 million and whatever it grows into. That's what AB trust planning is. So that's one, review the estate planning documents. Two, assess liquidity needs. Where is this money going to come from? On the, when I showed that $7 million individual and them losing, 500K, where's that 500K going to come from? Going to come from their non-qualified assets? Are they going to have to sell assets? Are they going to have to borrow money? Where is that money going to come from? Right? And that leads us into our third recommendation, which is insurance strategies, trust-owned life insurance. When the state of Washington calculates your assets, the value of your assets, they add up the value of your assets. If insurance is in a trust, guess what? They don't count that. So if you're worth 7 million and you've got $1 million in a life insurance policy and death benefit life insurance policy in a trust, that's not counted. So what does that do? It increases the net to heirs and it creates a pool of funds to cover the Washington estate taxes. Think of it as protecting the Washington estate taxes by like absorbing that bill for the family. Okay, so AB trust planning ensures that the first spouse's exemption is used. We here at CBS Brokerage review estate planning documents. So we can review these documents for your client. It's not tax or legal advice, but it helps your tentacles go in new directions, and it helps you provide good advice. And then we can help you, if you need, collaborate with local attorneys in the area to make sure that the family's documents are current and tax smart. Okay. Why consider life insurance? I just went through one reason, which is that it's outside the estate, right? Which makes it an ideal tool. But I also want to touch on the asset quality. So, if you just reduce all your assets down to a math equation, and I know there's more to it than that, life insurance, the death benefit on a permanent life insurance policy will outperform the the fixed portfolio and much of an equity portfolio. What do I mean by that? If I view each premium as a contribution and the death benefit as my return, the return on my, each premium is investment in the contract, death benefits the return. When the client's in their 87 to 90 age, when that policy is going to pay out, the internal rate of return on the death benefit is going to be between 7 and 11% income tax free. So if it's taxable, right, and they're in a 30% bracket, let's say, guess what? That's a 10 to 14% rate of return. So it provides that financial leverage, and it allows clients what I call portfolio stability. It allows clients to put a floor in place so they can chase yield with the rest of their portfolio. So how do we help you? And I know I'm going fast, but this is what I wanted to get to. We can provide you with estate tax forecasts. We can do it on demand. We can get it done, get it out to you within 48 hours. Same with estate plan reviews. So if you send us your clients' um, estate plan documents, we'll provide you with a tidy little update and summary. It's not, again, not tax or legal advice, but we'll put your logo on it too if you want. And then we'll also identify whether or not they're tax smart for Washington state taxes. We'll provide an insurance review and make insurance recommendations. And we'll help you, if you need, educate your clients on how estate taxes work and the steps they can take to avoid them. So what are our tools for engagement? So first, we have sample emails that encourage client action and talking points so you don't have to be an expert. So here's just a snapshot. We've got an email that we would be happy to provide you that you could send to your prospects and to your clients, encouraging them to coordinate with you to make sure they have a tax smart plan that deals with this increase in the estate tax in Washington. We provide talking points, so you don't have to be an expert, but think of this as an FAQ. If you have to play defense, clients say, well, what about this? What about that? We've anticipated what a lot of those questions are going to be. And then finally, a forecast. So if your clients, aren't sure that this is something that they need to deal with, you've got a handy, right there at your fingertips. Hey, you're worth 4 million now and you're still saving, someday you'll be worth more. You're not married, you're divorced, you're single, you're getting married, whatever. You've got some information to help, give kind of off the cuff, insights to bring that client on or help that client make a good decision. So we want to help you. We are prepared to help you. We understand the rules. We've developed tools for you to have success. With that, there's our contact information. We would absolutely love to hear from you. Again, my name is Jack Elder, Head of Advanced Planning for CBS Brokerage.